Now, my voice sounded absolutely terrible in the last video because I was using the microphone on my earphones. I decided to try it out, but turns out the microphone on my MacBook is probably a lot better. Anyways, in regards to the stock market, I was going to do a long update, but Peter DiCarlo over here at Traders Helping Traders has pushed out a pretty much perfect summary of what's happening on the Magnificent Seven. Now, if we scroll over to my TradingView tab for stocks, you can see it's been a few days since he pushed his video out. Not much, like 2 days, but the monthly BX trender for the S&P 500 is obviously still red because the market has not opened for this week yet. But if we have a look at the Gann swing indicator, you can see technically the monthly trend is still up. We have not broken this swing bottom from November, our panic little sell-off bar there. And we're still obviously well above the tops of February 2025. So pretty much any correction up to around 6,200 points is still bullish in my opinion. And obviously, if it takes, a couple of months, similar to what happened in the April tariff trade, where we saw, a 2-month correction, if it takes 2 months to sell off, around 10%, this monthly BX trender will come back up, and that would pretty much mean that you would be buying in at fair value rather than a premium, as Peter likes to call it. And you can pretty much see the same thing through the 2022 bear market. Like, you're buying in at fair value rather than buying in at like the peaks of 2021. And the same here, like if you were buying through the end of 2024 when everything was going parabolic, with Trump becoming president and blah, 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 like you're paying a huge premium compared to getting in the tariff crash. But anyways, no need to ramble. The NASDAQ confirmed a bearish signal. The monthly BX for February closed red, which is definitely not ideal. And Nvidia, same thing. Like, obviously, I'm not going to spend ages talking about the Mag 7 because Peter talked about it pretty well, especially Nvidia, so I'm not even going to cover that. Microsoft. This piqued my interest slightly because it's already sold off so much. And if you have a look at the monthly time frame, is my chart still on logarithmic? No, it's not. I'll put it on logarithmic. You can see, even though the monthly BX trend is red, and we have broken the swing on the monthly time frame, and we've exceeded the 150% extension of the double top, it is actually back to fair value, which I think has not been broken since the global financial crisis of 2008, 2009. So this is pretty much a 17-year uptrend for Microsoft. And if you bought every time price came back to either the 50-month TMA or the market bias, which I'm still using the old settings of 28.8, if I reset it to 33.88, you can see it lines up even nicer with the triangular moving average. And if you'd bought the dips of November 2022, obviously the bear market low, and obviously the tariff crash low of 2025, you would have made great money. And it's finally back to fair value. So I was talking to the TIA Discord about buying the dip around $400. Now, obviously, if you manage to snipe the bottom in the 380, 390 range, good on you. But I think this is going to be one of those times, and Peter was saying the same thing in his Mag 7 update video, where you can probably disregard the monthly BX trender being red and take a risk on this trade, because even if the price low isn't in and we are entering, a 1-year bear market or something across the stock market, it's very likely, based on the way this weekly chart is looking, that we could see around a 10% rally into the $450 or so range, similar to what happened in 2025. Like, price obviously kept going in that case. But even if we do form a lower high on the weekly time frame, that's still a 10% tradable range. And if you wanted invalidation, you get a monthly close underneath $376. And that's pretty much a 1:1 risk versus reward. But if you just look back over the last 17 years, you've definitely got a more than 50% win rate on this strategy. So I will take this 1:1 risk versus reward trade, especially if the win rate is phenomenal. Tesla is coming back to the 50% extension of the 2024 low. I think that was the yen. That wasn't even the yen carry trade low. Tesla made a higher low in that case. I can't even remember what happened in April 2024. But we made that... what was I going on about? Anyways, if you project low to high to low of April 2025, Tesla hit pretty much the 786 to 828 fib extension level, just taking out the previous all-time high by a few dollars, hitting the $500 target pretty much, and now it's come back to rest on the 50% extension. Technically, the monthly BX trender has not closed red this month, and it is still above the 50% extension. So Tesla is looking okay. And it's still on top of the monthly market bias, which I also have not reset to 33. I'll do that right now. But you can see Tesla tends to print a few more false signals on the monthly BX trender than something that trends a lot cleaner, such as Microsoft or Nvidia. And obviously, if you just go with this strategy, every time you get chopped up, like single digit, maybe 10, 20% loss here and there, you're in it for these parabolic breakouts. So even if the monthly BX trender closes red this month and I'm forced to sell my Tesla for profit because I got in, around $300 to $350 in this consolidation here, using a couple of weekly signals, even if I have to get back in at, say, $420 or $430, if I'm in it for a parabolic breakout, I will take that each and every single time. Now, Google is an interesting one. It's just gone vertical. And if we do a little fib retracement, you can see the 50% level is $246, which lines up pretty well with this little volume cluster here at around $250. So if the S&P 500 and NASDAQ keep selling off in the next few weeks, which if you watch Michael's video today, he talks about the S&P 500 potentially printing a Wyckoff distribution pattern, and that we are starting to break down from on the daily time frame. Now, I'm not obviously going to switch over to the daily. You can watch his video, but unless we get a sharp recovery this week or next week, Google and everything else could sell off, and I would be looking to buy around $250 because that would be closer to the monthly fair value band than buying all the way up, in the $300 region. So 246 to 252 looks like a good support level for Google. Apple looks like the monthly BX trender could close red unless we see a reversal. But one thing I do like is we are still holding above the previous all-time high. So even though this Wyckoff schematic might no longer be perfect, it is still looking a lot stronger than a lot of the other tech stocks. Meta is back to fair value. And one thing I like about Meta is it has already been selling off for a couple of months with the monthly BX trender being red. Now, obviously, it can keep going for another couple of months. But one thing I do like is if you were to buy now, you would only be risking around 10-15%, because once the market bias turns red, you could get out, rotate your capital somewhere else for a couple of months and get back in when you start seeing higher lows or swing direction changes. And, sometimes you might get chopped up on a false signal, like in 2018, 2020. But for the most part, I think now is probably not a terrible time to start considering buying Meta. I'm probably not going to enter myself just because I think there's better places to be putting my money. But if you did enter now and you ran, and your stop loss was a continued sell off underneath the monthly fair value band, which I can never. I wish there was like a setting where I could like click a button and it would automatically update across all my charts rather than having to go through and manually do them. So if anyone knows that, please let me know. Now you can see once I switch to 33, which this is exactly what Peter has been saying in Traders Helping Traders, it cut out COVID as a false signal because you no longer had a monthly close underneath the market bias / fair value band. Now obviously that 2018 was still a false signal, and obviously getting out in 2022 was a real signal. But in this case, it's saying that Meta is still slightly overvalued now. So you could potentially be buying at $560, which I think Peter was saying he'd look at start buying around $550. So yep, I retract my previous thesis. I will sit out of Meta a bit longer, and if it sells off, I will buy in at a better price. Amazon, I don't really have much to say about this, so I guess just take what Peter says as my analysis. I mean, I don't like the fact that the weekly time frame has wicked up to the weekly fair value band and rejected. Monthly looks like it's at fair value. Looks pretty good. If I switch over to 33, you can see we are at fair value. So this is where I'm kind of torn. Like, if, the S&P 500 does sell off, and this is kind of brings into what Jason was saying, you want to be buying into strength rather than be looking for cheap things. Like, obviously, if Nvidia, Nvidia, Tesla, Google, and Apple sell off along with the rest of the S&P 500 and NASDAQ, they will still be they will just be back to fair value, which will potentially be a phenomenal buying opportunity. But if Microsoft, what else? If Microsoft and Amazon sell off because they're already at fair value, they will start to, break down and potentially go into a very long drawn out consolidation. And I think Jason uses the phrase, the wind being taken out of the sails, where if something is smacked down so much, it just takes a long period of time to rebuild before it's ready to go again. And that's just something that I'm keeping at the back of my mind. So obviously, if we start rallying from here, it might be, if we just rally and the signal that Michael talks about on the S&P 500 plays out, where the daily time frame just sees a massive V-shaped recovery on today's terrible open with oil and the Iran crisis, that everything that's already ran so much might just chop sideways, whilst everything that's back to fair value, investors might be looking, oh, it's cheap, and throwing money into it, and they start running, which is kind of like the crypto narrative where Bitcoin runs first, then the large caps, and then the small caps. It's just that rotation of money where everyone's looking for the next thing that's ran. Now, obviously, that is, in my opinion, a lower probability thesis just based off of the weakness across all the markets, but that is obviously something to keep in the back of your mind. As Michael always says, if you don't consider both sides of the market, you will get wrecked. Now, Netflix is an interesting one. Before I even start my analysis, let me change this to 33. There we go. Netflix has bounced off the smart money zone absolutely to perfection, as well as the monthly market bias. So if you got in anywhere from $75 to $85, and even if you took profits at the 50% level, that's a good 10-20% swing trade. And as Peter says, when the monthly BX trend is red, that does not mean there's not good swings to the upside that are tradable. But if you're looking at long-term investing, unless this month closes above that 50% level, I'm not invalidating a further sell-off. Now, obviously, this bounce here was a lot stronger than that bounce of 2022, but because this month has not closed, you can't trade a long-term strategy based off of an unconfirmed signal, in other words. And again, I just don't think the market is ready to go much further. And if you look at Peter DiCarlo's X posts, he talks about, potentially we rally all the way up to, $100 or $110 before rejecting. And if it does come up to around $106, you could look at it as being a left shoulder, a head, and then a right shoulder, which then leads us into a potential months or year or two long bear market. Now, obviously, that's looking very far ahead. MicroStrategy, what is there to be said? I mean, it is breaking down from the monthly market bias. And even if I change this to 33, it's probably not going to look much nicer. Yep, still breaking down from monthly market bias, breaking below and closing below the 50-month TMA, meaning that MicroStrategy is probably in for a 2022 style sideways bear market consolidation, or at least, if this bull market cycle is to continue into 2027, like Jason and Michael are saying it could with the 18.6-year real estate cycle, it may just need months or even, a year to digest this huge move before it's ready to go again. Yeah, I'll be waiting for some more bullish signals before taking any trades on MicroStrategy, simply because every bounce on the way down has been so weak. So I'm not even sad that I missed this 30% rally, just because, if I was trying to counter trend trade this sell-off, I would have been burnt so many times to get this one win. So I'm not touching MicroStrategy personally until we start seeing, price action above the 50-month TMA, maybe some monthly swing top breaks, the Gann swing indicator turning back up, the monthly BX trend making higher lows. Coinbase, I don't have much to say on Coinbase. I might dedicate a separate video to it. Same with AMD, I think Peter DiCarlo has done some great analysis on AMD, and there's not much I can say about it. Palantir, again, there's not really much to say about Coinbase, I'm looking at this as a potential Wyckoff. I was looking at this as a potential Wyckoff reaccumulation schematic, but right now, it looks like it could, if we reject off the underside of the monthly market bias, set up for a fourth time breakdown and some much lower prices. Obviously, it could end up being a triple bottom if the monthly BX trender flips to higher lows and we see some moves that rocket to the upside. AMD, again, it's kind of in no man's land in my opinion. It's below its previous all-time high resistance, whether you're looking at candle bodies or candle wicks, but it's still above the market bias. Even if I switch it to 33, 33 is probably going to pull it down, yeah. I mean, it's really just in no man's land. Palantir, we got a nice bounce, but obviously the monthly BX trend is still red, and after a move as parabolic as that, I really doubt it's going to have the energy to go on another parabolic move until the S&P500 and everything starts to turn bullish. And that's pretty much it. Let me just quickly have a look and see if I talked about anything in the TIA Discord. Oh yeah, AMD, I talked about a potential weekly double top, and if we look at a 150% extension on that, it comes into around $160, which is also a level that Peter DiCarlo is tracking. If you look at his X posts, he's looking at 140 to 160. Now, obviously, he doesn't use a Gann swing indicator or fib extensions off double tops. That's like a TIA thing, but it's really nice when you see different layers of analysis coming together to form the same conclusion. So if we do get a sell-off, I will be, across the whole market, I will be looking at AMD between 140 and 160. If you are a member of TIA Premium, make sure you go to Stock Market and click on the Threads button and join my Stock Market thread, because I do a lot of posts in there, and do the same for my Bitcoin thread. Speaking of Bitcoin, I put my US dollar chart in the Bitcoin trading view window, and it looks like we are going to retest this 50% level from the underside. We got heaps of buying pressure on the daily BX trender, breakout above the daily market bias. Let's have a look at the weekly time frame. You can see the weekly time frame looks like it is going to potentially rally into the 50% level again, and we do have, light green on the weekly BX trender. And one thing to note is, if this week has a rollover and we get, a big sell-off in the US dollar and assets, go on the more bullish scenario, Bitcoin to 80K, some of the tech stocks keep running, if we do get that bullish scenario and the US dollar comes back down, it could do what happened in January, where we get this false move up followed by a savage sell-off, where this week reverses and, comes down to 96 or something ridiculous like that. Then we could be seeing a nice fourth time breakdown on the US dollar. And that could potentially lead to the US dollar coming back down to the low 90s or even the high 80s, which Jason and Michael have been stalking in their videos on YouTube, but more so with the TIA Premium and Pro communities. And that could potentially set up stocks, cryptos, and commodities into the final stage of the economic cycle. Now, being a weekly time frame, it could be, 2 or 3 months until that happens. And for the next 2 or 3 months, we could still see, further upside movement in the US dollar. We could see something like what happened at the end of last year, where even if the US dollar just grinds sideways, slightly trending upwards, maybe it comes to 100 or 102 and then comes a big rejection. It could bring on further pain for stocks and cryptos, which, if you look at all the monthly BX trenders, it is definitely a possibility. And as always, thank you all for watching. Please like, comment, and subscribe, and definitely keep your eyes on the chart over the next 2 weeks, on the charts over the next 2 weeks. Goodbye.